key players or key stakeholders of property and casualty insurance industry. So let us start with what is property and casualty insurance industry, or what is also known as non-life insurance. So non-life insurance, also known as property and casualty insurance, covers risks other than life. So they include property damage, liability, and health, etc. Let us learn what is the purpose of this presentation. The purpose of this presentation is to understand the roles and responsibilities of the key stakeholders of the property and casualty insurance industry or the non-life insurance industry. So these two words are being used interchangeably. In countries like Japan and India, we use the word non-life insurance. In United States, it is known as P&C insurance industry. The insured, one of the key stakeholders is the insured. For him, the industry exists. So the insured is an individual or entity who has purchased the insurance coverage. So he is the insured. His role is to pay the premium in exchange of coverage against specified risks. So he's paying premium upfront. In the event he meets a financial loss against the covered risk, he will be compensated for. His responsibilities is to share proper information during the application process about the risks. He has to pay premiums on time, and he has to take reasonable steps to prevent a loss. An example is a homeowner purchasing insurance to protect the property against fire and theft. The insurer or the insurance company or the carrier. The insurance company provides the coverage to the insured. It assumes the risks and compensates the insured in the event of a loss. The responsibilities of an insurance company include assess the underwriting risks, collect the premiums, pay the claims as per policy term. So this is the insurer or the insurance company or the carrier. Sometimes insurance companies are also known as carriers. Next is the insurance agent or brokers. Insurance agents are also known as producers. Insurance agents are typically compensated by insurance companies, whereas brokers may be appointed by the insured to secure the best and a suitable policy for them. These are intermediaries who facilitate the sale of insurance policies. They help the client choose the appropriate insurance coverage, assist them with the application process. So these are insurance agents, also known as producers, and insurance brokers. What are the responsibilities? They generally provide accurate information about the insurance products to the clients. They have to maintain ethical standards and comply with regulations. So an example is an insurance broker helping a business owner find the best commercial property insurance. Moving ahead. Next stakeholder is the underwriter. Underwriter is a professional who evaluates the risk, ensuring the person or asset. So underwriter defines whether the policy will be issued or not, whether the policy will be issued on the standard terms or conditions, or it has to be rated up. So they determine the terms and they determine the pricing of insurance policies. Their responsibility is to analyze risk factors, to decide upon appropriate coverage limits. And they also set premiums based on risk assessment. So they have a margin and they have to comply with underwriting guidelines. An example is an underwriter assessing the risk of insuring a coastal property against flood damage. So this is the role of an underwriter who evaluates the proposal and who typically will say a yes or no for issuance of the insurance policy. Next is loss assessors or adjusters, professionals who evaluate the extent of damage or loss. They investigate the claim and they ensure a fair settlement. You see, the insured has already paid upfront. Now he expects a fair settlement and he expects a quick settlement. So loss assessors come into picture here. Their responsibilities are to inspect the damaged property, to verify the cause and extent of the loss, and to recommend the settlement amount. Moving ahead. Regulators. You see, insurance is a highly regulated industry. Insurance is all about fair pricing and not about predatory pricing. So there is a risk. An individual wants to cover that risk, but he has to be offered a fair price. So regulators are government agencies or bodies overseeing the insurance industry. Regulators ensure that companies operate fairly. They comply with laws. One of their main responsibilities is to monitor the financial stability of the insurer, approve insurance rates and policy forms, protect consumer rights. The insurance regulator has to balance between the rights of insureds, and they also need to ensure suitable profitability for the insurance company. An example of insurance regulator is the National Association of Insurance Commissioners, or NAIC, setting up standards for state insurance regulators in United States of America. So remember this word, National Association of Insurance Commissioners, NAIC. Reinsurers cover the risk for the insurance companies. Even insurance companies need to cover their risks. So companies that provide insurance to other insurance companies are reinsurers. Two big reinsurers are Swiss Re and Munich Re. They help insurers manage risk by sharing the burden of large or catastrophic losses. Responsibilities of the reinsurers include assess underwriter risks transferred from primary insurers. They pay the claim as per reinsurance agreement. So for a large loss, the reinsurer will pay to the insurance company. Maintain financial stability to support primary insurers. So these are the responsibilities of a reinsurer. An example is a reinsurer covering a portion of losses from a major natural disaster. Claims examiners. So claims examiners are professionals who process the claim. They ensure that the claims are handled efficiently and fairly. They verify the validity of claims, determine the appropriate compensation amount, communicate with claimants and other stakeholders. So claims examiners are typically inside employees. An example for this could be a claims examiner reviewing a homeowner's claim for a water damage. Actuaries specialize in risk assessment and financial modeling. They work with financial data. They help insurers and regulators set fair premiums and reserves. So you see, pricing has to be fair. It should ensure profitability for the insurance company, and it also has to be fair to the insured. So they develop pricing models, they estimate future claims and losses, and they ensure financial stability for the insurer. An example for this could be an actuary calculating the premium for a new type of liability insurance. So whenever a new product will be introduced to the market, we will take help of actuaries. Let's conclude. The non-life insurance industry, or P&C insurance industry, has got various stakeholders. Every stakeholder has a role to play, and ultimately it is about risk and transfer of risk by pooling. So all stakeholders have their role, and as we understand the roles and responsibility of individual stakeholders, we will be able to understand the P&C insurance industry better. Thank you. This is your trainer Vijay Shekhar Shukla signing off for now. Thank you.